income of an individual. Taxation of income of an individual. Now, before we go into that, let me take some time to explain or define an individual for you. Who is an individual? Who is an individual? An individual will include an employee in employment, a partner in a partnership, a sole trader. I think I should put this down. An individual is made up of let's see now, made up of one, an employee, two, partner in a partnership, partners, three, sole trader, okay, four, a trustee, five, an executor. You've heard this before in the last lecture. I mentioned a trustee, I mentioned executor, and then families. These are persons that makes up individual. Right now, they're liable to tax on their income. What makes up their income? What is the source of income? We'll look at very soon. Now, for the sources of income of an individual, we have here gains or profit from trade. Gains or profit from trade, business, profession, or vocation. As we move on in the course of the lecture, we will try to look at trade. What makes up, when is a transaction regarded as trade? Because we need to know what is trade to be able to determine the profit from a trade. What constitutes a trade? We'll look at that in the next lecture. Right? So note that it is the profit. Profit, of course, we all know what profit is. Excess of income over expenditure, excess of revenue over expenditure. So profit or gains are liable to tax. This profit or gains are liable to, of course, personal income tax, because we're talking of individuals here. And then emolument from employment. Emolument from employment. Emolument from employment. The emolument here, we're talking of about your salary, your allowances, what have you, Christmas bonuses, and all that you get from working in an establishment or in an organization. From employment, in short. So benefit in kind and bonuses, I've already mentioned that as part of emolument, right? When we get to personal income tax, the computation, we get to see the beauty of items like benefit in kind, how they are computed. What do we mean by benefit in kind? How the tax of an individual is being computed, right? Dividend is also liable to tax. What are dividend? These are what you get from investments. What an individual gets from investment. For example, if you purchase shares, at the end of the year, you are supposed to be given a return. Let me use that word, return. Not the right word to use, return. Supposed to be given a return for your investment. This return is dividend. Okay, you're liable to tax. Which aspect of dividend? How much of a dividend received by an individual is liable to tax? We'll get to know, right? Interest, money kept in the bank and interest is liable to tax. Rent on rental property, okay, they are also liable to tax. Any charge or annuity, annuity here, money kept aside to grow to the future, right? For example, if you say in 10-20 years time you want to save so much as much as maybe say 10-20 million. The money that you're going to get after that 10-20 years, look at it as annuity, because you are going to be paying some amount in order to get your target, right? So any amount that is being paid into that pause, kind of, all right, is regarded as annuity